Welcome back, traders. Today, I'm starting this session with a capital of $777. This number is not just capital, but also a symbol that every trading journey must begin with confidence, discipline, and a clear strategy. We'll be applying the compounding strategy, where every profit earned is reinvested into the next trade. This way, the account grows gradually yet consistently, like a snowball that gets bigger and stronger over time. Remember, the key always lies in money management, emotional control, and discipline in following the rules. So watch closely, because from just $777, I'll show you how the compounding strategy can lead us toward much bigger targets. To apply this strategy, the very first step is to set up the indicators on your chart. 7-period moving average in green. This serves as your short-term trend line, capturing the most immediate price action. 20-period moving average in yellow. This reflects the medium-term trend direction, showing the market flow over recent candles. 60-period moving average in red. This represents the long-term trend and also acts as a dynamic support and resistance zone. MACD with default settings. This functions as your momentum tool and confirmation of the overall trend. By combining these four indicators, you gain a complete view of the market: short-term trend, medium-term flow, long-term structure, and momentum confirmation. When all of these align, it gives you much higher accuracy in your trades and more confidence in every decision you make. The way to apply this strategy is actually very simple, but don't underestimate it. The key is discipline and consistency. We focus on two major confirmations: the moving average crossovers and the MACD signals as our entry triggers. When a bullish crossover occurs on the moving averages, it's not just another signal. It means buyers are stepping in with strength, upward momentum is forming, and the probability for price to continue rising is much higher. That's when we take a buy position. On the other hand, when a bearish crossover forms, it tells us that sellers are in control. Price shows weakness, the trend shifts to the downside, and that becomes the ideal moment to enter a sell. But remember, we don't rely on crossovers alone. We must always pay attention to the red line, the 60-period moving average, which acts as a dynamic support and resistance. Every time price touches this line, it often reacts, bouncing or rejecting. And that reaction gives us additional confirmation for a precise entry. By combining crossover signals with the bounce reaction from the red line, this strategy becomes stronger, more accurate, and most importantly, repeatable with consistency. As your mentor, I want you to understand, trading is not about chasing every move in the market. It's about waiting for the best confluence of signals, then executing with discipline. That's how a simple method turns into a powerful compounding strategy. All right, traders, price has touched the red line, our key support area. From this bounce, we can see buyers stepping in and rejecting any further drop. That's why I'm taking a buy at the red line, with stop loss just below support, and profit target at the nearest resistance. The strategy is simple. As long as price stays above the red line, the upside remains valid. Let's see how the price plays out. Yes, exactly. Price is moving upward as expected. All right, traders, let's open the market again. All right, traders, now we're opening the market again. Our focus today is on the moving average crossover. Look closely, the fast MA has crossed above the slow MA. This crossover usually marks the beginning of bullish momentum, with buyers stepping in to dominate the move. Why is this crossover important? Because whenever the fast line breaks above the slow line, it signals that upward momentum is building. And when this signal is confirmed by candles pushing higher, the probability of continued upside becomes stronger. I'm taking a buy because of this crossover. The strategy is simple. We follow the buyers once the technical signal confirms the move. Let's see how the price plays out. Yes, price is pushing upward right after the crossover. That proves our analysis correct. We're ready to continue and open the market again for the next opportunity. Take a look at the MACD indicator. Right now, we have a bearish crossover where the MACD line cuts below the signal line. This is a clear sign that bearish momentum is building and sellers are taking control of the market. Why is this crossover important? Because whenever the MACD line crosses downward, it's often followed by continued weakness in price. On top of that, the histogram turning red confirms that selling pressure is getting stronger. I'm entering a sell because the MACD crossover is valid. The strategy is simple. Follow the market direction when the technical signal gives a strong confirmation. Let's see how the price reacts. Yes, price is dropping right after the MACD crossover. Our analysis worked perfectly and we made a profit. Let's open the market again for the next opportunity. Take a look at the MACD indicator. Here we've got a sell signal. The MACD line has crossed below the signal line and the histogram is turning red. This shows bearish momentum is building and sellers are in control. I'm entering a sell here. Let's see how the price plays out. Yes, price is dropping just as the MACD indicated in profit. We're ready to continue and open the market again for the next setup. Look at the MACD indicator. We've got another bearish crossover with the MACD line cutting below the signal line. This shows selling pressure remains strong and sellers are still in control. I'm taking a sell on the MACD crossover again, since this signal is valid for continuation to the downside. Let's see how the price reacts. Yes, price is dropping as expected. We're ready to open the market again for the next opportunity. Take a look at the MACD indicator right now. We have a bullish crossover where the MACD line cuts above the signal line from below. This is a clear sign that bullish momentum is starting to build and buyers are stepping into the market. Why is this crossover important? Because MACD doesn't just show trend direction. It also measures momentum strength. When the main line crosses above the signal line and the histogram turns green, the probability for price to continue upward increases significantly. Now, let's see how the price plays out together. Yes, price is pushing upward exactly as analyzed. Okay, profit. We're ready to continue and open the market again for the next opportunity. Look at the MACD indicator. We've got another bullish crossover. The main line cuts above the signal line, and the histogram is turning green. This shows buyers are stepping back in with fresh momentum. I'm taking a buy on MACD again because the probability for an upward move is still strong. Let's watch how the price reacts. Yes, the candles are moving higher just as expected and we made a profit. Alright traders, that's it for today's trading session. From start to finish, we've seen how the compounding strategy can work consistently and build profits step by step. Remember, the real key is not just entry, but discipline, emotional control, and consistent execution of the system. Thank you for joining this session and for deeper learning and advanced strategies. Make sure to join the VIP to learn compounding strategy. See you in the next session. Stay profitable. Acted, and we made a profit.